Ladies and gentlemen of planet Earth, today is a great day. Do you know why today is a great day? Because we have been given by the stock market deities, we have been given the buying opportunity of once in a quarter lifetime. That's right. If you have not been here before, then you may be scared. You may be shivering. You may be quivering in your seats, wondering what's going on in the market. Why are my stocks going down? What's going on? What's going to happen? Am I going to make it out alive? Should I sell everything at the bottom? Don't sell. Stay in the game. If you buy great companies, then these are just buying opportunities. And that's why I want to tell you guys why today I sold some Bitcoin to buy this dip that we're seeing in the market. I bought two companies specifically because they just came out with earnings. And I can't help but say that the earnings calls for both these companies was absolutely phenomenal. Because both these companies have something in common, which is called growth, which is called total addressable market, massive, huge, bigly addressable markets. These companies are Amazon and Tesla. Of course. So, let's talk about Amazon, because that's the easy one to start. Amazon is one of the best businesses on planet Earth. And they are currently trading at a forward PE ratio of something like 27. So right now, you're getting one of the greatest companies on planet Earth trading at a PE ratio of 27. This company hasn't even started doing buybacks yet. All right, that's how early we are in the stage for Amazon, that we have not even entered the buyback moment. Now, there are two things that we can talk about with Amazon as to what makes them so absolutely great and why specifically now they are so absolutely great. One, we need to talk about Andy Jassy. So Andy Jassy is the CEO of Amazon. And previously, before he was the CEO, when Mr. Bezos was the CEO, Andy Jassy was in charge of AWS, which is their cloud business. Now, their cloud business is how they make pretty much all their money. They are profitable now, actually, on the retail side of the business that everyone's familiar with, them sending you packages and all that, which is also a bullish story, massive bullish story. But let's talk about the cloud, because that's their bread and butter. That's what's churning out cash. Andy Jassy has said this same exact line, I believe, on the last two earnings calls, if not more. So almost a year now, if not a year or more. I mean, I've only recently started listening to the call, so wouldn't know past that. But every call I've listened to with Andy Jassy, he says the same thing. He says this right here. So, he says, he's answering a question about their cloud business, AWS. And he says, I think the one thing I would say about that too, Mark, is the business today, as I mentioned, is a $105 billion revenue run rate business. About 90% of the global IT spend is still on premises. And if you believe that equation is going to flip, which I do, There's a lot of growth ahead of us in AWS as the leader in all those dimensions I mentioned. So then he talks about AI as well. That right there is huge because he's telling you right there, that out of all the businesses, only 10% of their data of their business is ran on the cloud. 90% of their business is still on premises. On premises means that they're still filing stuff in filing cabinets in doctors' offices. On premises means they are not storing their information, their data, and finding inefficiencies on that data using the cloud. They are not doing that yet. 90% of businesses, it's still arcane methods of storing their data and sifting through their data. On premises. That means on site. That means in the doctor's office. They're not using the cloud. They're not using all the efficiencies that they can find from the cloud. So he's saying that's obviously going to flip. Obviously, 20 years from now, 25 years from now, it's going to be 90% of businesses' information and data is on the cloud and 10% is on premises. It's going to flip. So that tells you where we are in the S curve of Amazon's biggest cash cow business that is currently pumping out $105 billion of revenue. Okay, so now let's go back and let's think. Okay, that's cool and all. Now, what are the numbers? Okay, well, if we're pumping out $105 billion today, and we're at mid-30s for margins on that business. So let's say 0.35. We're making $36 billion. Where's the camera? $36 billion a year, as is, from this business. Cool. Now, let's say that this business is going to, what? 10x? Maybe not 10x. Let's say 8x. Let's say this business is going to 8x because we're only at 10%. The market's only captured 10% of this total addressable market. So if we 8x this business, going from 105 billion times 8, we're going to be doing $840 billion a year in revenue in what, 20 years, 25 years? So 840 times 0.35, we're going to be making $300 billion a year from this business. Did you just hear what I said? Did you just hear what I said? We're going to be making $300 billion a year from this business. Just as it stands. We didn't talk about retail. We didn't talk about people buying deodorant on Amazon for the rest of their lives. We didn't talk about any of these other businesses that Amazon has. So, 300 billion times a 30 multiple. Can we put a 30 multiple? Apple's trading at like 33 multiple times 30 gives you $9 trillion market cap. $9 trillion would be the market cap. That's just this business. Like, Amazon is the most no-brainer buy in the market at these levels. So 9 billion divided by 1.6 trillion, right? So it's a 5.2x from here. So 5.2 divided by 20. So you're looking at 26% growth for the next 20 years. That is just off the numbers. We did not talk about buybacks. Remember, the equation for 100x stock is revenue growth plus net income growth times buybacks times time. So, revenue growth, check. Net income growth, check. Are we going to have buybacks? Probably. And time. All we got is time. So that's why this morning I loaded the bag. August 2nd, 2024. Note it. It'll be noted in the internet. John bought the bag. Bought the Amazon bag at these 160s level. I think I'm in at like 165. Juicy returns. So that'll be cool. Make a nice little 100 bagger off that one. But let's keep going. Let's talk about Tesla. Because everyone's all worried about what's going on with Tesla, what's going on with their growth, where are we at, what's happening. Well, guess what? Let's put the robo-taxi conversation to the side, just for a moment. Let's talk about their car business. Tesla. Let me pull it up. Tesla is great because they are at this perfect inflection point where they're about to print money. And the last time we had an inflection point when we were about to print money on Tesla, guess what? We printed money. Okay, we 10x'd. And I see that happening again because it's almost identical, which is the funniest part. It's almost identical situation. The last time it happened was before the Model 3 came out. When the Model 3 hit the books, the stock hit the moon. Okay? Same thing's going to happen with this new 25K vehicle, this new smaller, compact, subcompact, smaller than a Model 3 vehicle that is going to hit the market. So this vehicle is going to hit the market next year, as in less than 12 months from now. Not only next year, but within a year from today. He said on the call, and he said this very with high conviction, with high certainty, he said this. He said, "We won't get too much into the product roadmap here because that is reserved for product announcement events." We'll get back to that. "But we are on track to deliver a more affordable model in the first half of next year." And then he goes back into the autonomy conversation because I'm going to run off on a tangent. But let's focus on that. We are on track to deliver a more affordable model in the first half of next year. See, Elon cannot talk about this, but at the same time, he has to, tell the shareholders what the hell's going on with the company. Because he doesn't want to talk about the smaller Model 3 because he doesn't want to cannibalize the Model 3 sales. I understand. Because if he talks about the Model 2, let's call it the Model 2, 25K Tesla, and I'm in the market to buy a Tesla next year, and he's over here telling me that they're building a smaller Model 3, then I'm like, okay, I'm not going to buy my Model 3 in 3 months. I'm going to wait for this Model 2 to come out that's going to save me 5, 6, 7, 10 grand. Okay? So he can't talk about it. But at the same time, he has to tell the shareholders what's going on with the business. So he just throws it in there one little line yeah, we're on track to make the smaller Model 3 in the first half next year. But, we'll reserve that for product announcements. Like, we don't want to talk about it today. Okay. But that is a huge signal when it comes to the fundamentals of the business and the earnings and revenue of this company. The revenue for this business is about to skyrocket just off of this. When this happens, when we get, it's probably going to be Q3 earnings. When we get Q3 earnings of next year, so a year from now, it's going to show up massive revenue from selling this vehicle. We're going to see, they're going to be like, oh yeah, by the way, we sold like 150,000 of this smaller vehicle, and our revenue just shot up like 15% from one quarter to the next. It's going to be one quarter to the next quarter. You're going to see a massive jump in the revenue. And we're not even talking about the energy business, which is huge on its own. That's $1 trillion market cap business, just the battery energy business. But just talking about this car that's coming out. So it's a beautiful situation because it's rare that you have a situation where the company doesn't want to talk about a major money generator because they're afraid it's going to hurt their current money generators. So because they don't want to hurt their current money generators, they don't talk about it. And then therefore the stock market and the investors of the business don't really know about it, aren't really ready for it when it does hit the books. So then that leaves this massive arbitrage opportunity, exactly what we're getting, to buy the company right before it happens. And that's the opportunity we're being left with. So Tesla's going to go from selling 3 million cars a year, let's say, they're at like 2 million. They're going to go from selling 2 million cars a year to 4 million cars a year with this new vehicle. This vehicle is going to double their sales. Sorry, double the production. The units sold. Okay, so that's just the smaller Model 3. That's that conversation there. Now let's have the real conversation, which is autonomy. Now, I get it. Autonomy, it's a flip of the switch. It's a binary thing. Is it going to happen or is it not going to happen? Well, if you've actually driven around in a Tesla, you would understand that this is going to happen. It's a matter of when, which is a big matter. Okay, if it happens in 10 years from now versus 18 months from now, that's a big difference. Okay, in your portfolio, that's going to hurt. But if you believe it's really going to happen in the next 24 months, then this is an important conversation and you should listen. And if you don't believe it's going to happen in the next 24 months, then I urge you to go sit in a Tesla and drive right around in full self-driving. And if your mind's not changed then I don't know, go do whatever you want. But anyways, we need to talk about the actual numbers because I started actually running the numbers and I was like, whoa, dude, we're going to make so much money. We're going to make so much money. So let's run the numbers. So there's how many miles are driven in the United States of America? How many miles are driven in USA each year? I think it's 3 trillion. Yeah. So 3.2 trillion miles are driven a year in the United States of America. 3.2, can't really see it, whatever. It's there. 3.2 trillion miles. Okay. How much does it cost to ride in an Uber? Between $1, $2 a mile. Okay. How much does it cost to ride in your own personal vehicle, driving a car, paying for insurance, paying for gas, paying for oil change, tire change, repairs, all that? It's about 65 cents a mile to personally own a vehicle, pay for it, all that. So we're at 65 cents per mile. Let's say Tesla can build a robotaxi for $15,000 and it goes for 1,000,000 miles. That's the life of a robotaxi. That brings us down to 1.5 cents per mile. Okay. So if you're at a penny and a half is your cost. And the market right now is paying 65 cents for that product. What's the product? The product is transportation, service. That is massive margins that you can chew on. Because you could come in at half and you could say 32 cents a mile is what we'll charge. If people are currently paying 65 cents, 62 cents a mile to own their own vehicles and ride around in the world, and they're happily doing that, how do you think they're going to feel when they find out they can pay 32 cents a mile? If I told you you could get the same product or service for half the price, you steal the market. You steal the market. If you're 20% cheaper than the competition, you steal the market. So 50%, you're absolutely dominating. Okay, so now we know the numbers. We're going to make 30 cents. Let's say we're going to make 30 cents a mile in robotaxi. And there's 3.2 trillion miles in America each year. Okay, so 3.2 trillion. How much of that market are we realistically going to chew on? Let's say 10%. And that's going to take some time to get to 10%. But let's say 10%. Just 10% of 3.2 trillion is 320 billion miles a year of driving that could be done in Tesla's robotaxi business. So $320 billion, thousand, million, billion, miles, 320 billion miles times 0.3, we're going to make 30 cents per mile, gives us $96 billion a year in profit, straight to Tesla's bottom line. So Tesla's going to make $96 billion a year off this business just by penetrating 10% of total miles driven in America. We didn't talk about China. China's another 2 trillion miles a year market. So 96 billion there. Let's talk about China. China is 2.1 trillion miles a year that they drive. 1,000, million, billion. Let's say they get 10% over there. So that's 210 billion miles. Let's say China market's a little cheaper. Let's say they only get 20 cents per mile. That's another $42 billion a year in net income for Tesla. So 42 billion plus our 96 billion over here gives us $138 billion a year. Let's slap a 30x multiple on that. And you're at a 4 trillion market cap. So, robotaxi very easily, just showed you the math, very easily is a 4 trillion market cap business. We didn't talk about buybacks, and remember, that's how we get our 100 bagger, is through the buybacks over the years. So, assuming they do buybacks, and they cut the outstanding shares in half over 20 years, 25 years, then you're at 8 trillion. This is without Optimus, which is the other massive business that we're not even talking about. So Optimus is here. That's the crazy part. Optimus is happening at the same time that full self-driving is happening. They're not happening one after the other. No, they are going to happen at the same time. And the little spark, the little kindle to this fire is going to be the first half of next year. We get the affordable model, the $25K vehicle. That's going to spark you back to your $400 a share. And then from there, Robotaxi is going to rocket ship us to the trillions, and Optimus is going to rocket ship us to the tens of trillions. But in the meantime, what's going to carry us there is going to be Robotaxi is going to carry us through the Optimus reality. But they're literally going to be happening right at the same time. Why do I say that? Because in the earnings call, Elon said, blah, blah, blah. Dang, where is it? He said in the earnings call that the bots would be working in the facility doing real jobs this year, and next year they would be ready to start selling them. I believe that's what he said. So that means we're like ready to go. Like the kinks are being worked out. It's already happening. And the stock is still under $1 trillion market cap. So massive amounts of growth in Tesla and Amazon. These two companies are going to be huge, 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 tens of $1 trillion market cap businesses over the coming 20 years. And today, August 2nd, you were given another buying opportunity, because the beauty of the stock market, and I'll wrap this up, the beauty of the stock market is that it trades every day. There's liquidity every day. You have a buyer and a seller every day. Other businesses aren't like that. Other businesses aren't that beautiful, because with such liquidity comes schizophrenia. There are moments in your business, your personal business, that's not on the stock market, where you're like, man, things are tough right now. Guess what? Those would be the days when your stock would be down in the dumps and would be trading for a bargain. But it doesn't happen because it's not liquid. So this doesn't happen in other businesses. But when there's liquidity like this, which is the beauty of stocks and public equities, then you get these crazy opportunities to buy. And when you're a long-term holder dealing with short-term sentiment, there's your alpha. That is alpha. That is the alpha. The alpha is in the holding. The alpha is in the calm that you bring to the storm. Does that make sense? The calm before the storm. That didn't go well. Anyways, that's what I got for you guys. I love Tesla. I love Amazon. I sold some Bitcoin to make these purchases, and I would do it again. If you found this helpful, if you found it informative, then drop me a like. Make sure you get subscribed. I'm trying to get 1,000 subscribers. And hopefully I'll make another one of these soon enough. Stay healthy, stay wealthy. Stay tuned for the next one. Peace.